Hello my dear students, hope you guys are all doing good. Hope you guys are all perfectly fine. So in this video we will try to quickly cover MTP. So whatever MTP, that to MTP series 1 I am going to explain. So whatever MTP that has been released for September 2024 examination for CA Inter Audit series 1 we are going to talk in this video. Series 2 I will upload a separate video. So as I always say, before you go for the examination, it is very important for us to go through MTPs and RTPs. Why? Because there are more chances the similar kind of questions or more related questions will be tested in the main examination also. So that's why that has been proved even in the May 2024 attempt. I am expecting the same thing to happen even in September 24 attempt as well. So it is completely mandatory for you to compulsorily go through MTP series and RTP series. So RTP video I have already uploaded. MTP videos now I am uploading. So in this video I will talk about series 1. Series 2 video will come soon. So but please make sure that you are going through all this content in MTP and RTP before you go for the examination. And one more thing, you need not watch this video completely. Just try to solve the MTP on your own. If at all you are getting stuck somewhere, then you can come and watch this video for the purpose of explanation. So I don't expect each and everyone to start to watch this video from the beginning till the ending. What you can do, you try it out on your own. If at all you are getting stuck somewhere, then only comment for this. Understood? So having said that, I will not waste much of your time. We'll directly jump into the discussion. So first we will be taking up case scenario based MCQs for our discussion. So let me read the facts of case scenario number 1. See, Mrs. Vishwacharya and Associates, a CA firm based in Orissa, is appointed as an auditor of CBF Bank for the financial year 2023-24. Okay, very good. So there is a firm, Vishwacharya and Associates, they have been appointed as auditor of bank. So might be this question is mostly related to audit of banks. These days audit of banks is getting a lot of importance. ICA is testing most of questions, and you'll be able to find that ICA is testing questions regarding NPA norms and all. They're concentrating less on audit procedures, they're concentrating more on NPA norms. So my humble request, please go through NPA norms once before you go for the examination. Right. Okay. Next, during the course of audit, it came to notice that CBF Bank has sanctioned an overdraft facility of 75 lakhs 2 times limited. So this bank, CBF Bank, they have granted OD facility for one of their customers who is times limited. Of how much amount? 75 lakh rupees. 2 times limited. However, as per the stock statement furnished for the last quarter, the drawing power was calculated to be 50 lakhs. So here 75 lakhs is sanctioned limit, 50 lakhs is drawing power. 75 lakhs is sanction limit and 50 lakhs is drawing power. So that is what the sentence meant. So what we have understood till now from the facts, the bank is there, they have given loan, they have given OD facility to one of the customer, times limited, sanction limit was 75 lakh rupees, whereas the drawing power is only 50 lakh rupees. Next, it was observed that few advances were guaranteed by the central government. The bank has given guarantees, but those advances were guaranteed by central government. Some advances were guaranteed by central government, some advances were guaranteed by state government. So one advance is guaranteed by central government as a part of Make in India initiative. However, the guarantee was not invoked, that means guarantee is still in force, and the advances were overdue for 75 days. These advances were classified as standard assets and were regarded as NPA for income recognition purposes. Is it correct? So if you remember our discussion, whatever we had in the audit of banks chapter, in case of central government guaranteed advances, if the amount of guarantee is not invoked or repudiated, for income recognition purposes, we have to treat it as NPA, but for asset classification, we'll keep it under standard category only. In case of central government guaranteed advances, if the central government guarantee has not yet invoked and if that account remains overdue, for asset classification, we don't treat it as NPA. For asset classification, we keep it as standard only, but for income recognition, we treat it as NPA. That means even though that advance remains under standard category, income will be recognized only on cash basis. So here also the bank has done the same thing. The account remained overdue. For asset classification purposes, they have classified it as standard, but for income recognition purposes, they have treated it as NPA. Is this correct? Yes, this treatment is correct. Very good. Next one. Then one more advance is there, which is guaranteed by state government as a part of power generation initiative. However, the guarantee was not invoked and the advances were overdue by 80 days. These advances were also classified as standard asset and were recorded as NPA for income recognition purposes. See, if you remember our discussion once again, whatever we had in our regular class, if the guarantee is given by central government, then only special privilege will be there. If the guarantee is given by state government, no special privilege. If the state government has given guarantee and if the account remains overdue for more than 90 days, both for income recognition and asset classification, it will remain in the NPA category. If the state government has given guarantee, there is no special privilege. if the account remains overdue for more than 90 days. For asset classification also, it will remain in NPA category. Even for income recognition also, it will remain in the NPA category. Here, the state government has given guarantee, but here the amount is overdue only by 80 days. So that means here the account has not become overdue by 90 days. So this will remain for asset classification also under standard category only, and for income recognition purposes also, you can treat it as standard only. No need to classify them as NPA. When it is required to be classified as NPA, when it remains overdue by more than 90 days. If it remains overdue by more than 90 days for asset classification, even for income recognition, for both the purposes we treat them as NPA. But here it is overdue not by 90 days, less than 90 days only it is overdue by 80 days only. So for asset classification also we can treat it as standard, for income recognition also we can treat it as standard, no need to classify it as NPA. So second accounting treatment is wrong, first accounting treatment is correct only. Clear? Next, what else we have seen? Additionally, XYZ Limited is a borrower availing a cash credit facility of 110 lakhs against a security of paid stocks and debtors up to 90 days. So this bank has also given one cash credit facility to another client who is XYZ Limited. And what is the amount? 110 lakh rupees of cash credit facility they have given. And for that cash credit facility, they are taking security of stocks and debtors. And that too, they are asking debtors, they will consider only up to 90 days for the purpose of calculation of drawing power. Margin stipulated was 25% of the stock, 40% of the debtors. They are even given margins also. On stock margin is 25%, on debtors margin is 40%. Bank has calculated drawing power based on the following information provided by XYZ Limited. See, we have done numerous questions regarding calculation of drawing power. Here also they are asking us to calculate the drawing power. Let us do it. So what is the value of stock? So I have to calculate drawing power for stock. I have to calculate drawing power for debtors. So what is the value of stock? 130 lakh rupees. Okay. What is the value of debtors? 75 lakh rupees. Perfect. Next. Value of stock fully damaged and included in one above. See, in this 130 lakh rupees worth of stock, there is 7 lakhs worth of stock which is damaged. You tell me, will the bank consider damaged stock for the purpose of giving you a drawing power? No. And that too they are telling fully damaged. 0. So this 7 lakhs of stock has become 0, but still it is included in 130 lakhs. Should we consider that for drawing power? No, we should not consider. So take out this 7 lakh rupees. Next. What is that telling? Value of debtors exceeding 90 days included in 2 above. In the question itself, they have told value of debtors should not be a value of debtors which is outstanding for more than 90 days should not be considered. So should we consider this 10 lakh rupees? No, this 10 lakh rupees also we have to reduce from the debtors. And as we know from the stock, we have to reduce creditors value also. So value of creditors is 60 lakh rupees. That also we have to reduce. Now if you reduce that, how much you will get? 130 minus 67. If I am not wrong, it will be somewhere around 63 lakh rupees. 63 only, no? So let me use a calculator. Sometimes mind actually stops working on the simple calculations. And if you take out the debtors value will become 65 lakh rupees. So now on this we have to apply margin. On this we have to apply margin. So they have given in the question on stock 25% is the margin, on debtors 40% is the margin. So let me calculate it. Let me calculate it here for you. So 130 minus 7 minus 60, it will become 63. So on this 25% margin, so 63 into 0.25, which will come to 15.75. If I reduce that, 63 minus 15.75, it will come to 47.25. Next, if I take out the margin on the debtors, so 65 lakhs is the value of the debtors. On that margin is 40. If I take it out, 26 lakh rupees. So the balance is going to be 65 minus 26. It will be 39. So what will be the total drawing power? I have to add both. So 39 plus 47.25. If I add both, so drawing power is coming to 86.25 lakh rupees. 86.25 lakh rupees is the drawing power, and we should always keep one thing in mind: drawing power should never go beyond my sanction limit. So here they have clearly told sanction limit is 110 lakh rupees, and the drawing power which we have calculated is less than the sanction limit. Well and good. So drawing power will be 86.25 lakhs. Next one. Also, the outstanding balance in one of the loan accounts was 25 lakh rupees, and the realizable value of security as assessed by the bank or approved valuers was 2.25 lakhs. Now immediately what should strike your mind is advance where there is an erosion in the value of the security. So as we have seen there, if there is an erosion in the value of the security, if the value of the security is less than 50% of the previously assessed value, then it has to be classified as doubtful category. However, if the realizable value is less than 10% of the outstanding amount, then it has to be directly classified as loss asset. See here, outstanding amount is 25 lakh rupees. If you calculate 10% on that, it will be 2.5 lakhs, but value of the security is only 2.25 lakhs. It is less than 10% of the outstanding amount. Entire 25 lakhs has to be treated as loss asset. We have to treat it as loss asset, and we have to either completely write it off or create a 100% provision. Clear? Right. So bank identified as the same as erosion in the value of the security. It was classified as doubtful category, and provision was made for the doubtful assets. A discussion also took place among the team members regarding issuance of the audit reports after the completion of the bank audit, and annexure to the same, such as LFAR, report on compliances with SLR requirements, report on treasury operations, report on compliance of Ghosh committee, and report on adverse credit deposit ratio. So they are telling that as an auditor, you are required to give different kinds of reports. In the case of bank, some reports they have given. So all these reports are correct. You are required to give LFAR. You are required to give report on compliance with SLR requirements. You are required to give report on treasury operations. You are required to give report on Ghosh committee recommendation implementations. But you have to give report on adverse credit deposit ratio, not adverse credit lending ratio. So in the question they are telling adverse credit lending ratio, no. As per the RBI guidelines, you are required to give adverse credit deposit ratio in the rural areas. See how minutely they are tested. Clear? So all these reports are okay, but you aren't supposed to give something like adverse credit lending ratio. You are required to give adverse credit deposit ratio. Understood? Now, based on these discussion, they are asking us some questions. Let us have a look at that. Based on the above facts, answer the following questions. What are they? With respect to overdraft facility sanctioned to times limited, the account will be termed as out of order when? So the question is, when an OD facility will be treated as out of order? When an OD facility will be treated as out of order. So let us have a look at the study material, whatever they are trying to say here. For the sake of convenience, I will show you when a OD facility will be treated as overdue. Yes, see here. So an OD facility, it will be considered as out of order when the outstanding balance remains continuously in excess of the sanction limit or drawing power. If the outstanding balance in the account is exceeding drawing power or sanction limit continuously, then we will classify it as out of order. Or in cases where the outstanding balance is the principal operating account is less than the sanction limit or drawing power, but there are no credits continuously for 90 days as on the balance sheet date. The outstanding balance is less than sanction limit or drawing power only, but in that account there are no receipts. There are no credits for a span of 90 days as on the balance sheet date. Or there are credits are there, but aren't enough to cover even the interest whatever has been debited. There was an account, the amount is less than within the drawing power or sanction limit only. There are credits also in that account, but that credits are even lesser than interest which has been debited. That means the receipts from the customer were not able to cover even interest amount also. Then also will classify it as out of order. So an OD facility will be classified as out of order in three cases. In case the outstanding amount has exceeded the drawing power or sanction limit in excess of if the outstanding balance is in excess of drawing power or sanction limit continuously, and even though the amount is within the drawing power, within the sanction limit, but there are no credits for 90 days. Even though there are credits, they are unable to cover even the interest component. Then we will classify it as out of order. So let us see. They are asking when OD facility will be treated as out of order. If you remember, how much loan has been given to the times limited? 75 lakh rupees was the sanction limit, 50 lakh rupees was the drawing power. So now let us have a look at the option. The outstanding balance remains continuously in excess of 75 lakh rupees. Will we classify that as out of order in that case? Yes, out of order. The outstanding balance remains continuously in excess of 50 lakhs. Then also out of order. That's what we have read. If an outstanding balance is either in excess of drawing power or sanction limit, we'll classify it as out of order. The outstanding balance in the account is less than 75 lakh rupees. But there are no credits or payments deposited into the account continuously for 90 days as on the balance sheet date. In this case also we'll classify it as out of order. The outstanding balance is less than 50 lakh. So if the outstanding amount is less than 50 lakh rupees, then there is no purpose of classifying it as NPA, provided if there are credits in the 90 days. So that's why here there is no purpose of classifying it as out of order, but in the first three cases it is getting covered in the scenario of out of order. So in any of these cases, 1, 2, 3, in any of these cases, the account will be classified as an out of order, So option A will be the correct option. So let us cross verify with the key. Yes, option A will be the correct option. Next one. Which of the treatment given by the bank on the provisioning and income recognition is correct in the case of bank guarantee given by central government and state government? We have seen that also, no? Central government and state government guaranteed advances. In that case, first treatment is correct, second treatment is wrong. So which one is correct? Only option, only first accounting treatment is correct, second accounting treatment is wrong. Next one. In the given case, drawing power of the borrower XYZ Limited should be how much? As we have calculated, how much we got? 86.25. Is it the answer also? Yes, 86.25. We did the detailed calculation, no? I think I need not do it once again. So we did the calculation here, 86.25 lakhs is a drawing power. Next one. The bank has identified an erosion in the value of the security and made provision for doubtful debts. Whether the treatment by the bank for doubtful asset is correct? In the given case, as we have seen, there is an erosion in the value of the security. And the value of the security has fallen to less than 10% of the outstanding amount. But the bank has classified as doubtful asset. Is it correct? No. If the realizable value of the security is less than 10% of the outstanding amount, it has to be classified as loss asset and 100% provision should be created. So tell me, is the accounting treatment of doubtful asset is correct? No. First option they are telling yes, no, it is wrong. Second one, no, the existence of such security should be ignored and the asset should straight away be classified as loss asset. It may be either written off or fully provided. Yes, this is what which has to be done. C point is telling yes, so straight away we will reject. They are telling that a doubtful classification is correct. They are telling yes, no, straight away we will reject. We'll read the D point. No, the existence of the security should be ignored and the asset should be straight away classified as loss asset. Provisioning should be made for doubtful asset. No, even the provisioning also should be made for loss asset only. 100% provision only you have to create. So option B will be correct option. So fourth one, option B. Next one, fifth one. The statutory central auditors of a bank must furnish, in addition to the main audit report, various other audit reports. Yes. From the options, choose the audit reports that Visvacharya and Associates shall furnish. What and all they have to furnish? Should they furnish LFAR? Yes. Are they required to furnish a report on compliance with SLR requirements? Yes. Are they required to furnish a report on treasury operations? Yes. Are they required to report on compliances as per Ghosh Committee recommendations? Yes. Are they required to report on adverse credit lending ratio? No. They are required to report on adverse credit deposit ratio. So fifth one they need not report. So first four things will be reported. So 1, 2, 3 and 4. So 1, 2, 3 and 4, fifth one doesn't become applicable. So let us cross verify with the key. Yes, fifth one doesn't become applicable. Everybody comfortable with the first case scenario? Alright. So let us have a look at now remaining case scenario based MCQs. So let us start reading the facts of the case scenario number 2. Priority Limited is a large company engaged in the manufacturing of terry towels, making steady profits on a year-to-year basis. So this company, there is some large company, they are into manufacturing of terry towels limited and they are making steady profits. Year-on-year basis, they are making consistent profits. PMR and Associates, statutory auditors of the company since last 2 years. And they are in the process of establishing audit strategy for conducting statutory audit under the Companies Act for the financial year 2023-24. So they are establishing their audit strategy. The company has 5 branches which are audited by independent auditors appointed under Companies Act 2013. It has also a wholly owned subsidiary company which is audited by another audit firm under the name of JKL and Associates. So 5 branches are conducted audit by separate branch auditors. There is one wholly owned subsidiary that auditor is also different. That means there are component auditors. Different component auditors are there. Branch auditors are also there. Subsidiary auditors are also there who are different from the main auditor. The engagement team has noticed that company has maintained several bank accounts and there is a substantial movement in the fixed deposits during the year, leading to risk of material misstatement in cash and cash equivalents. That means engagement team found that in the area of cash and cash equivalents, risk of material misstatement is very, very high. Okay. The engagement team has planned procedures regarding the same. Since the risk of material misstatement is very high, they planned audit procedures here also. At the planning stage, engagement partner is also trying to set materiality for the financial statements as a whole. You are required to set the materiality for the entire financial statements. The following information extracted from the financial statements is given as under the extract of the financial data they are giving. Revenue is 100 crore rupees, total assets are 40 crore rupees, profit before tax is 8 crore rupees, total liabilities are 30 crore rupees. That means they are giving you various examples of the benchmarks. In deciding benchmark, we can take any benchmark, no? So now you tell me which benchmark will be more appropriate. Which benchmark will be more appropriate? See here, there is a hint in the question itself. So in the first line itself, they have told the company is making steady profits. The company is a profit-making entity and profits are also consistent. So it is a hint that in the given case, among all the benchmarks, which one will be more suitable benchmark? they can take profits as a benchmark. Profit before taxes is a more appropriate benchmark. Why? Because the hint is there in the first line, the company is making steady profits on year-to-year basis. Clear? So there is no volatility in the profits. Since the profits are consistent, so most best option for choosing the benchmark will be profit before taxes. Next, while designing a sample for verifying revenues of the company as a part of test of details, engagement partner has determined tolerable misstatement to be 5 lakh rupees in order to address the risk that aggregate of individual immaterial misstatements may cause the financial statements to be materially misstated. Simply, the auditor has said that tolerable misstatement, his tolerable misstatement is 5 lakh rupees. One of the newly joined engagement team members has little conceptual understanding of what is tolerable misstatement determined by engagement partner. He also has no idea of effect of change in tolerable misstatement on sample size. How the tolerable misstatement will have an impact on the sample size. See, we all know that tolerable misstatement and sample size are inversely related. If auditor sets low tolerable misstatement, that means auditor is willing to accept a low amount of misstatements, then he has to go for a bigger sample size. On the other hand, if there is a increased tolerable misstatement, that means auditor is willing to accept more misstatements. If the auditor is willing to accept more misstatements, the sample size should come down. So there should be inverse relationship between tolerable misstatement and sample size. Tolerable misstatement means the risk which auditor is willing to take. The misstatement which auditor is, wait a minute. So tolerable misstatement means the misstatement which auditor is willing to accept. So lower the tolerable misstatement, more will be the sample size. So there exists a inverse relationship. Next, third one, during the course of audit, while performing test of details, engagement team has come across certain misstatements in the selected samples pertaining to verification of revenues. The team has projected misstatements to the population of revenues. So finally, when they find a misstatement, they have to do the projection. No, the team wants to comply with standards on auditing strictly. So while doing the projection of misstatements, they want to comply with the standards on audit. Which standard they have to follow here? SEP'24 which is talking about audit sampling. Now, based on these facts, we have to answer a few questions. Let us see. The auditors of a company are in the process of establishing audit strategy. Which of the following is not a relevant factor in establishing overall audit strategy? So while establishing audit strategy, the auditor will consider various factors. Which of the factors is not considered? They are asking. They are not asking which factor will be considered. They are asking which of the factors will not be considered. Number one, consideration of 5 branches which are audited by independent auditors. So will I check or not whether branches I have to do or branches are done by separate branch auditors? So that I will consider for establishing audit strategy or not? Yes. Consideration of wholly owned subsidiary company audited by another auditor. Auditors of the components also I will check. If I am conducting audit of a company, whether subsidiary company will be audited by me or audited by another person, that also I will consider. No, in establishing audit strategy, yes, that also will be considered. Expected time of holding AGM in accordance with the provisions of Companies Act, nothing but entity's timetable for reporting, that also I will consider. As I have told, in the audit strategy, we set only 2 things. What is the timing? What is the resources? So within what time we have to complete the audit, to decide that even we will consider timetable for reporting. This also will be considered. Nature, timing and extent of planned procedures for cash and cash equivalents. See, this we will not consider. What nature, timing and extent of audit procedures we have to perform in one specific area, that we will consider in audit plan. That is a factor to be considered in audit plan. That is not the factor to be considered in audit strategy. In audit strategy, we talk only about 2 things. What is the time? We decide on only 2 things. What is the time required? How many resources are required? What audit procedures we have to do in each and every area, that we will consider in audit plan, not in audit strategy. So the first 3 factors will be considered, but the 4th factor will not be considered. They are also asking the same question. Which of the factor will not be considered in establishing audit strategy? D factor we will not consider. Next one. For priority limited, which benchmark would make the engagement partner most likely to use for setting materiality for the financial statements as a whole? I have already told you, there is a hint in the question. Since there are consistent and steady profits, most appropriate benchmark will be percentage of profit before taxes. Next one. In the given scenario, assume that engagement partner has decided to increase the tolerable misstatement. I told what kind of relationship exists between tolerable misstatement and sample size? Inverse. So if the auditor is increasing the tolerable misstatement, what should happen to the sample size? Sample size should come down, since they are inversely related. While designing sample, select the correct statement. So since the tolerable misstatement was increased, it would lead to decrease in the since tolerable misstatement was increased, it will lead to decrease in the sample size because there is a inverse relationship. It will lead to increase in the sample size. No, it would have no effect on sample size. No, it is not possible to draw interference. No, we can easily draw interference. There is an inverse relationship. It would lead to increase in the sample size. Sorry, decrease in the sample size. Inverse relationship. No, the auditor is willing to tolerate more misstatement. He will decrease the sample size. Clear? Next one. So 8th A only, right? Yes, 8th is A only. Next, 9th question. While performing procedures on designed sample, the engagement team identified certain misstatements in the selected sample and they projected these to the entire population of revenues. According to the requirements of the auditing, standards on auditing, which statement is correct? So while doing projection, what you have to do? If you remember, in audit sampling chapter, we have understood while doing projection, what we should do is first we have to divide misstatements we have identified into two categories. What is a anomalous misstatement and what is a non-anomalous misstatement? Non-anomalous misstatement, we will do the projection. Non-anomalous misstatement will do the projection. To that projection, we add the anomalous misstatement without projection. So projected misstatement plus anomalous misstatement, that will be the best way of analyzing the sample results. So if you have any doubt, you can go and check the marathon. This concept I have explained. So correct way of doing the projection is once you identified misstatement in the sample, divide it, how much is anomalous, how much is non-anomalous. Non-anomalous, you have to do the projection. To that, you have to add anomalous misstatement without any projection. So that is the correct way. So let us find out the correct statement. Anomalous misstatements or anomalous misstatement is auditor's best estimate. No, it is not the best estimate. The projected misstatement plus anomalous misstatement, if any, is the best estimate of measurement misstatement in the population. Yes, this is correct. When projected misstatement exceeds a tolerable misstatement, sample provides a reasonable basis. No, sample does not provide a reasonable basis when projected misstatement exceeds the tolerable misstatement. When projected misstatement plus anomalous misstatement, if any, exceeds tolerable misstatement, sample provides a reasonable basis. No, sample does not provide a reasonable basis. See, these statements I have actually added in my material. If you find my material, you'll be able to find one question evaluation of the sample results. There you will be able to find this. Clear? So these two statements are also wrong. Option B is the correct option. Now let us have a look at the third case scenario. So very easy case scenario. We'll try to complete this as well. Bandhu Charitable Trust is considering appointment of MNO and Associates Chartered Accountants as independent auditors of its financial statements. There is one non-profit organization, Bandhu Charitable Trust. They want to appoint MNO and Associates as their auditors. The trust is engaged in providing affordable healthcare services. It is in the interest of both auditor and client to issue an engagement letter so that the possibility of misunderstanding is reduced to a great extent. It is therefore important that each party should be clear about the nature of engagement. It should exactly specify the scope of work, such as engagement letter is exchanged between trust management and auditors. Nothing but they are telling importance of the engagement letter. Okay. While performing audit procedures, it is noticed by the auditors that the bills of two vehicles are not in the name of the trust, but in the name of trustees. The company has bought two vehicles. They're not, the trust has bought two vehicles, but the vehicles are not in the name of trust. That means what is missing here? Rights and obligations. Here, rights and obligation assertions is not satisfactory. If the trust has paid for that vehicle, the vehicle should be in the name of trust only, not in the name of trustees. However, payment of these vehicles was made from bank account of the trust. The said vehicles are used for activities of the trust. A trust has paid it. It is getting used for trust activities. Then the vehicle should be in the name of the trust, but it is in the name of trustees. So rights and obligations is not satisfactory here. Next, it also noticed that a sum of 50 lakh rupees is reflected in trust financial statements in the name of Gamma Instrument and Equipment in schedule of creditors. Okay, in the financial statements of this trust, there is one creditor amounting to 50 lakh rupees. The said amount is outstanding since last 2 years. It is a outstanding balance from long period of time. The auditors sent a confirmation request to the said supplier and seek management's cooperation in this regard. The auditor want to send a confirmation request and they have consulted the management regarding this. However, management of the trust informs the auditor regarding certain dispute going on with the supplier of equipment due to some quality issue. When I went to the management and told, sir, I want to get a confirmation from your creditor, management gave me one explanation. What they're telling is, sir, we have one dispute with the creditor. We and creditors are not on good terms. We are having some issue. The case is going on and they are having some quality issues. It is further informed that dispute is near settlement and it would not be proper to send a confirmation request as it can affect the negotiation process. So that's why what company has requested the auditors, sir, since already some issue is going on, if you send the confirmation request once again, it will lead to even unnecessary trouble, sir. Please don't send the confirmation request. You tell me, is it a valid reason? Yes, it is a valid reason. The management is saying a valid reason why not to send a confirmation request. If there is a valid reason for not sending confirmation request, then what SA 505 says you to do? In that case, SA 505 says in that case you have to analyze whether the reasons given by the management are acceptable. Whatever reason management is telling, is it genuine reason or fake reason? Along with that, you should try to perform alternate audit procedures. Try to think whether any alternative procedures you can perform. This is what you are supposed to do as per SA 505. Now, depending on these facts, they are asking some questions. Let us see. Based on above facts, answer the following. As regards exchange of engagement letter between trust management and auditors is concerned, which of the following statements is likely to be true? Regarding engagement letter, they are asking you to find out the correct statement. Guys, you tell me, who will send engagement letter to whom? Client will send the engagement letter to the auditor, or auditor should send the engagement letter to the client. The correct sequence is auditor should send engagement letter to the client and get the client's acceptance. Client will not send the engagement letter, auditor will send the engagement letter. Option A, engagement letter is sent by M&O and Associates, who is auditor, to the client, who is Bandhu Trust. It includes a reference to expected form and content of the report. In that engagement letter, you have to give reference what will be your expected form and content of the report to be issued by them, and a statement that there may be circumstances in which such report may differ. And also you have to say, sir, there could be some, this is how we are required to give you our report. This is the expected form and content of the report. But in case if we come across certain circumstances, we might be required to change the form and content of the auditor's report. This information should be included in the engagement letter. Included or not? Yes. This is one of the contents of the engagement letter. So auditor will send the engagement letter to the client. In that engagement letter, he will say what will be the expected form and content of the auditor's report. And he should also mention a factor that if they come across certain circumstances, they will change the expected form and content of the auditor's report. Yes, this option is very much correct. Option B, engagement letter is sent by Bandhu Trust, client to auditor, 100% wrong. Next, C, engagement letter is sent by M&O and Associates to Bandhu Charitable Trust. Okay. It includes reference to expected form and content of the report to be issued. However, it does not include a statement that such a report may differ. No, that has to contain that statement also. You should add some statement. In some circumstances, we might be required to differ from expected form and content. That statement also you have to add. But option they are telling you should not include that statement. No, you have to include that statement. So this option is also wrong. Option D, engagement letter is sent by M&O and Associates to the client. It does not include reference to expected form. No, it includes reference to expected form. So option A is the correct option. Clear? Next, considering the issues related to vehicles as described in the case study, identify the most appropriate statement. We have seen one issue regarding the vehicles now. What is that? Trust paid it. It is getting used for trust purposes, but those are not in the name of the trust. So what is getting problematic here? Rights and obligations. Auditors have identified misstatement regarding existence. No. Auditors have identified misstatement regarding rights and obligations. Yes, this is correct. Not regarding accuracy, not regarding completeness. Auditor has identified misstatement regarding rights and obligations. Next, what course of action should the auditor take regarding the amount payable to the equipment supplier where the management has communicated that sending a confirmation request could negatively impact the negotiation process? So management requested me, sir, please don't send the confirmation request to the creditor. There is a valid reason also. What I should do? The auditor should issue adverse opinion. No, this is not the option. The auditor should seek audit evidence as to validity and reasonableness of the reasons for refusal and perform alternative audit procedures. So this is what SA 505 says. If the management is giving you valid reason, try to obtain audit evidence whether that reason is valid or not, and also try to perform alternative procedures that you should do. The auditor should withdraw from the engagement. No, don't take that extreme step. The auditor should disclaim his opinion. No, this we will do in case if there is no valid reason. But here there is a valid reason, so you should try to perform alternative audit procedures. So these are case scenario based MCQs. Now let us come to general MCQs. CA Prince, after developing the audit strategy for Vedika Limited, develops an audit plan but finds a need to revise the materiality levels set earlier, and therefore a deviation from the already set audit strategy is felt necessary. So auditor has already established audit strategy. He has already developed audit plan. Initially, he set the materiality level, but during the course of the audit, because of some reasons, he is required to revise the materiality. So if he is revising the materiality levels, he need to make changes to the audit strategy and audit plan also or not. Is he permitted to do it? Yes, he is permitted to do it. So since he is revising the materiality, since he needs changes to the audit plan, first he should come and change the audit strategy, then he should make the changes to the audit plan. First strategy, no. So first make changes to the strategy, then make changes to your audit plan also. Drop the audit and withdraw, that is not required. Devise a new audit plan and then change the strategy as per the revised plan. No. First revise the strategy, then as per the strategy, revise the plan. First modify the audit strategy and thereafter prepare the audit plan according to modified strategy. Yes, this is the correct one. Continue with the audit plan without considering audit strategy. No, you can't change one, you have to change both. So C is the correct option. See, from audit strategy, planning and program alone, we have seen 2 MCQs. One case scenario based MCQ, one general MCQ. Next one. Jasmine was of the view that audited financial statements are not a guarantee against probable wrongdoings in the financial statements of the companies. Yes, auditor will not provide guarantee. What kind of assurance does audit of financial statements provide? Reasonable assurance, which is a high level of assurance. It provides reasonable assurance meaning low level of assurance. No. It provides reasonable assurance assuming meaning a high level of assurance. Yes. It provides reasonable assurance meaning absolute assurance. No. It provides reasonable assurance meaning a moderate level of assurance. No, not a moderate level. Review engagement will provide moderate level of assurance. Audit engagement will provide reasonable assurance. So that's why option B is correct. Next. CA Raman instructed his article Raju to verify whether employee benefit expenses of Prep Limited has been fairly allocated between operating expenses incurred in production activities and general expenses. So I'm an auditor, I'm asking my article assistant, please check whether whether employee benefit expenses are properly classified between operating expenses and general expense. Nothing but whether employee benefit expenses are properly classified into direct and indirect expenses. That proper classification has been done or not. I asked my article assistant to go and check it. So which of the following assertion I'm addressing? By asking my assistant to check whether there is a proper classification between direct and indirect expenses. What I'm asking him to do? I'm asking him to do whether there is a proper classification, proper presentation is there or not. Expense is there, but I'm checking proper division. So that means I'm asking my assistant to check whether there is a proper presentation of the expense or not. So I'm not checking completeness, I'm checking presentation and disclosure. Measurement also I'm not doing, occurrence also I'm not checking, just I'm checking proper classification. In the option, if they would have added a classification, I would have marked for classification. But classification is not there, but more or less it is related to presentation requirement. So here I'm trying to obtain evidence regarding presentation and disclosure. Understood? So with this, we are done with the MCQs part. MCQs we are successfully done with. So now we will have even a quick look at descriptive questions. We have many interesting questions in this RTP. So we'll try to discuss the descriptive questions as well now. So let us start discussing the descriptive part. There are very interesting questions here and also very conceptual questions are there here. So this MTP is one of the example, the practical, the descriptive questions, whatever we are going to discuss now, they are literally an example how they can twist the question in an extreme way, where the students will get will not actually get the clarity what they are asking the question about. Such kind of questions are there here. So it is actually like a practice. Let us solve a few questions. Not all questions are that tricky, but little bit of questions are there. Some limited number of questions are there which are actually very tricky, which will test your concept to an extreme level. So one such example is this question 1A. Subodh has recently joined an audit firm as an articled clerk. He was in the process of assembling audit working papers in the audit file of Corp Limited as per the instruction of his senior. So one of the article assistant is doing the assembly of the final audit file. While assembling, he noticed following working papers in the audit file. So in that audit file, he found one activity. He found one schedule here. Okay. So timing of audit activities. So he has found in the working papers what is their timing, how they have planned their audit, what is the starting date, what is the ending date. They have he has found the document relating to it. So the document says audit planning. The first step which they will do is audit planning, which will start from July 1st and on July 5th. Then engagement quality control review will happen. The plan will be reviewed by engagement quality control reviewer, which will happen from July 6 to July 7. Then actual audit field work will happen from July 10 to August 20. Then that work will be reviewed by the manager on one day, August 21. Then engagement partner will review the work from August 22 to August 25. Then engagement quality control reviewer will do the review on 26 to 27. And the responses to audit memo, nothing but that they will have some queries. No, that responses they will get on August 28. And that will be reviewed by the partners on August 29. Final review will happen by engagement quality control reviewer on August 30. Audit report will be finalized on 1st September and 2nd September. Final audit report will be given on September 3rd. So this is how the work has taken place. This is what the dates on which, this is how the flow of audit has actually happened. This was found by one of the article assistant in the audit documentation. The above working papers list certain factors which are considered by the auditor while establishing audit strategy. See how they are linking. First they spoke about audit documentation, now they are connecting that with the audit strategy. So they are telling that from the above working paper list, there are certain factors which are considered by the auditor while establishing audit strategy. So as we know that while establishing audit strategy, auditor will consider various factors. So here also they are telling the above working paper list contains certain factors which are considered by the auditor while establishing audit strategy. In the above working papers, one important factor is there which will be considered by the auditor while establishing audit strategy. So what important factor is reflected here? Timing of audit, timetable for conducting the audit. Timetable for conducting the audit. This is the factor which we will consider while establishing audit strategy. If you find the audit strategy chapter, so just let me take you through that content so that I can understand it in a better way. So if we go to audit planning strategy program, come on. Yes, no, not this. Fast. Just a minute. So audit strategy planning and program, where is it? Here it is. So if you see this chapter, yes, see this. Where is it? 1 minute. This one. So what are the factors which are required to be considered by an auditor in establishing overall audit strategy? So what factors will be considered? Characteristics of the engagement, entities, reporting objectives of the engagement, factors that in the auditor's professional judgment which are significant, results of the preliminary engagement activities, and knowledge gained on other engagements. These many factors will be considered while establishing audit strategy. But you tell me, in the question, in the documentation part which they have given, what they're mainly concentrating on? Which factor is getting reflected here? Reporting. That means when they have to start the audit, when which activity should happen, when the reporting get closed, when final report has to be given. That is found in the audit documentation. That means which factor of the audit strategy is getting reflected here? Reporting objectives. So if you see this reporting objectives part, while establishing audit strategy, the auditor has to consider various requirements. One factor is he has to consider what are the reporting objectives for that engagement. In that he will consider what is the entity's timetable for reporting. So what is the timetable for reporting? That is what has been considered now here. So what should be the timetable for reporting? That is what is getting reflected here. So he should consider timetable for reporting, organizations of meetings with the management and those charged with governance, the discussions with the management and those charged with governance, and what type of report is required to be issued, what should be the timing of the report. So these are the important factors which are required to be considered while establishing audit strategy. That is only reflected in this audit documentation. Now the question is, explain how these considerations highlight in above working paper could have helped the auditor. Now the question is, if you have these kind of things, if you consider entity's timetable for reporting, what is the starting point, what is the ending point, if you consider this while establishing audit strategy, how it will benefit the auditor? It will benefit the auditor by betterly planning the audit procedures and completing the audit within the time, not deviating the timelines. This is how considering the timetable for reporting will help the auditor. So very tricky question, very indirect question, lot of time you will take in order to understand this, but I hope I was able to give some sort of clarity here. So the question is, they told that one of the article assistant has found one extract from the audit documentation. That documentation is talking about the timetable for completing the audit. Now this timetable for completing the audit is one of the factor which will be considered while establishing audit strategy. So that's what they're telling indirectly. They did not say reporting objectives, but they're indirectly telling the above working paper list contains certain factors which are considered by the auditor while establishing audit strategy. Explain how this consideration, if you consider this timetable for reporting, if you consider these reporting objectives for establishing audit strategy, how it will help the auditor, how the auditor will be benefited by considering the reporting objectives. So if you look at the answer here, the answer also says more or less the same thing. So they have told the same thing. You have to consider one of the most important factor which you have to take into consideration is ascertainment of reporting objectives. And what and all you have to consider in reporting objectives: timetable for reporting, organization of meetings, discussion with the management regarding expected communication, nature and timing of communication required. So all these factors are required to be considered in establishing audit strategy. The question which they are asking is, if you consider these matters, how it will help the auditor? That is the question now. Explain how these considerations highlighted in the above working paper could have helped the auditor. If you consider these factors, how it is going to get benefited, how the auditor is going to get benefited. So if you read it, in the given case, working papers highlights that auditor has taken into account expected timelines to plan the audit and nature of communications required. Since the working papers relate to statutory audit of a company, the ascertainment of reporting objectives of the engagement helps the auditor to plan timing of different audit procedures and also nature of communications. So if you consider reporting objectives, you can betterly plan the timing of your audit procedures, and also you can know how the communications of reports should happen. Nothing but overall it will increase the effectiveness of the audit. That is how auditor will get benefited by considering reporting objectives. So very tricky question. Don't expect all the questions will be like this, but don't expect these kind of question will not come in the exam. These kind of questions also will come, but not all. A very handful of questions will be there which could be very tricky, which will actually ignite your thought process. Next one. So that's why I continuously ask you to solve MTPs and RTPs. Next one, let us have a look at the next question. 1B. CA Tina, while inspecting financial statements of a company, noticed that gross profit ratio of the company has increased from 14% in the year 2022 to 24%. So gross profit of the company has increased from 14 to 24. Considering the above, she has assessed risk of material misstatement to be high with respect to assertions relating to revenue and various direct expenses. Since there was a significant increase in the gross profit, she assessed that risk of material misstatement is very high with regarding to revenue and other direct expenses. CA Tina wants to know few possible reasons which could have led to the abnormal jump in the gross profit. So this auditor wants to know what could be the reasons for jump in the gross profit. During the discussion among engagement team members, her junior, Miss Tisha, expressed her view that detection risk in this engagement should be kept at a high level. When the risk of material misstatement is very high, you should keep the detection risk at a low level. There is an inverse relationship between components of audit risk. Here they are telling risk of material misstatement is high, but one of the engagement team member is telling they can keep the detection risk also at a higher level. No, it can't happen. When the risk of material misstatement is high, the detection risk should be kept at a very low level. Now, what is the question? List out few possible reasons which could have led to the abnormal jump in the gross profit ratio. This is very practical question. They're asking you, apply your mind and tell what are the various reasons because of which gross profit can jump. So what could be the various reasons? There could be overstatement of revenues. Might be revenue has been overstated. Might be closing stock has been overstated, or expenses might have been understated. Purchases might have been underreported, or direct expenses might have been underreported. So these could be the possible reasons why there could be abnormal gross profit increase. They are also asking the same thing. Tell us a few reasons why there could be abnormal increase in the gross profit. Either you have to overstate the incomes and closing stock, or you have to understate the profits. So same thing they say here in the answer. Few possible reasons could have led to abnormal jump in the gross profit ratio, like overvaluation of inventories, overstatement of revenues, or understatement of expenses. One more question. Do you agree with the viewpoint of Tisha? One of the engagement team members is telling, since the risk of material misstatement is very high, they should also keep the detection risk at a very high level. Do you agree with that? No, there should be inverse relationship. If the risk of material misstatement is very high, the auditor should always try to keep the detection risk at a very low level so that you can keep the overall audit risk at an acceptably low level. Clear? So that explanation you have to write. So this question is actually from risk assessment and internal control. So you will be able to find all that whatever I have explained. There should be lower detection risk, not higher detection risk. You can read it. It will be very general sentences. Next one. Expert Industries is engaged in petrochemical business. Due to nature of its business, the company has hired PQR Associates, a reputed firm of chartered engineers, to determine the quantity. Expert. The company has appointed an expert to determine the quantity and valuation of inventories for the preparation of financial statements. So there is a management expert. Client has used an expert for determining quantity and value of inventories. The auditor of Expert Industries Limited want to use the same as audit evidence. So now auditor wants to make use of the management expert's work for the purpose of obtaining audit evidence. Before using the work of PQR associates, management's expert, what aspects should be taken care by auditor? Direct question from SA 500. So what aspects you are required to consider while using the work of management expert? So you have to evaluate the competence, capability and objectivity of that expert. You should obtain an understanding of the work of that expert. You should evaluate appropriateness of that expert's work. Very simple question, straightforward question. So with this we are done with question number 1. Let us talk about now question number 2, 2A. Stay Fit Private Limited is a startup that has been in business for about 2 years. It runs an application which provides valuable information pertaining to nutrition and help its clients to access customized healthy food. This is into some health related business. The company's revenues are expected to grow in the coming period. The company's revenue is going to increase in the coming year. Although company has reflected net losses in its financial statements for the last 2 years, it has managed to meet its financial commitment. The company is facing losses, but that doesn't mean they are unable to pay their loans at all. Even with the losses also, still they are able to manage to pay their financial commitments. The financial statement for the last 2 years were prepared on going concern basis of accounting. The management of the company wants to follow the same basis of accounting for the current year also. In the current year also, management wants to prepare the financial statements on going concern basis only. Do you think it is acceptable here? Yes, it is acceptable. Even though the company had made losses in the last 2 years, they're able to pay the financial commitments, no? And also it was clearly given in one statement that the company's revenues are expected to grow in the coming year. There is an indication that company will grow. Even though they have incurred net losses, they are able to pay their financial commitments. So that means going concern is valid only. Going concern for the last 2 years was valid. I don't find any significant threat also here. Yes, management can comfortably follow going concern basis of accounting even in the current financial year also. They can do it. Is the view of the management appropriate? Yes, 100% correct. They can happily prepare the financial statements on going concern basis. What do you mean by preparation of financial statements on going concern basis? You will recognize the assets and liabilities in the normal course of business. However, if the going concern becomes invalid, then you have to value your assets and liabilities on liquidation basis. That is not required here. The management can prepare the financial statements assuming going concern as valid only. So you are required to justify, is the management decision appropriate? Yes. How does the going concern affect the preparation of financial statements? Nothing, but they're asking you to write what is the importance of the going concern in the preparation of the financial statements. So what is going concern entity will continue for the foreseeable future. So what do you mean by going concern basis of preparation of financial statements? We can recognize the assets on historical cost basis. What if going concern becomes inappropriate? Then we have to recognize all the assets and liabilities on liquidation basis. That differential component has to be taken to the statement of P&L. So they're asking you to write the importance of the going concern assumption, a question from SA 570. Clear? I think you can write it. Very general answer will be there. No much complications and all will be there. Very simple answer. You can read it. Next. PQR and Associates and MNO Company, both firms of chartered accountants, have been appointed as joint auditors of Gamma and Beta Limited. Before the commencement of the audit, the joint auditors should discuss and develop a joint audit plan. 100% yes. In developing the joint audit plan, the joint auditors should identify division of audit areas and common audit areas, explain stating other relevant considerations in this regard with reference to standard on audit. Which standard on audit they are referring to? SA 299. Nothing but what are the special considerations of the audit what are the special considerations in the case of joint audit. In that also there will be one part which will talk about. So let me show you that part. Let me take you through the material once. So in SA 299, there will be one question. Where is it? Somewhere here it will be. Joint audit, where are you? Just give me a minute, I will show you. So these are the reporting requirements. This is other matter paragraph, so it will be below. Fast. Yes. Yeah. Here we have joint audit. So if you see here in the last paragraph, you will be able to find special considerations as per SA 299. And if you see here, the C point, in developing joint audit plan, the joint auditors should identify the following areas. So these are 5 points they have to consider and develop the joint audit plan. That is what the question also says. So they are asking what other considerations you have to keep in mind while developing the joint audit plan. So what considerations you have to keep in mind? These considerations: identifying division of audit areas, ascertaining the reporting objectives, considering the factors that are significant in directing the engagement team efforts, results of preliminary engagement activities, and nature, timing, and extent of resources. Clear? So this paragraph you are supposed to write. Next one. The management of Cool Drinks Limited suspects that some employees of the company may be involved in making fraudulent payments to dummy workers at its various plants in the country. Therefore, they are considering appointment of firm of auditors to conduct audit involving detailed examination of accounts. So one company suspects that there are fraudulent payments happening in the payments to the workers. They are creating dummy workers and making the payments. So they have appointed one firm of auditors to do an in-depth verification of that wages payment. However, one senior person among board members, Mr. P, objects to use the word audit in proposed assignment. But one of the board members is saying that, yes, you are appointing the firm of auditors to do in-depth verification of employee payments, but we should not call that assignment as audit. Is he correct? Yes. Why? Because the assignment which they are talking about here is investigation. Investigation actually involves a deep examination which will be conducted with a special purpose. However, audit we do with a general purpose where we will verify the entire financial statements and will express an opinion on entire financial statements. Here, the company is appointing a firm of auditor not for expressing the opinion on entire financial statements. They are appointing the firm of auditors to do in-depth examination of one particular account. Yes, it is not appropriate to use the term audit here. It is appropriate to use the term investigation for this assignment. Also discuss how audit is different from investigation. They're simply asking you how audit is going to be different from investigation. Audit is different, investigation is different. We have one question in our material: how audit is different from investigation. That answer you are supposed to write here. Clear? Next one. 3A. Mr. Chetan is appointed as an auditor of Spot Limited, a small company. Mr. Chetan is aware that CARO 2020 is not applicable to small company, 100%. List out the classes of companies that are specifically exempt from applicability of CARO. See how many marks are given? 5 marks just for writing CARO applicability. So for which companies CARO will not be applicable? So CARO will not be applicable for a banking company, insurance company, Section 8 company, 1% company, small company, and a private limited company which satisfies 4 conditions: not being a subsidiary or holding of a public company, having a paid up capital in reserves and surplus is not more than 1 crore rupees as on the balance sheet date, and which does not have a total borrowings from banks and financial institutions exceeding 1 crore rupees at any point of time during the financial year, and the revenue not exceeding 10 crore rupees as per the in the financial year. So just for writing these 5 points, you are going to get 5 marks. Simple, straightforward question. Next. Z Limited is engaged in the manufacturing and export of shoes. The statutory auditors of the company wants to reasonably ensure that only the inventories recorded in the financial statements are exclusively owned by the company. Nothing but whatever inventories are recorded, the auditor wants to know that those inventories are actually existing. Only those inventories which are owned by my client, those should only be included in my financial statements. So the auditor wants to obtain audit evidence regarding existence, and the inventory should not include any inventories that belong to third party. However, it should include inventory owned by the company but lying with a third party. If your client's inventory is lying with a third party, that should be included. But third party stock is lying with your client company, that should not be included in the inventory. Advise the auditor on the audit procedures to be performed to achieve this assurance. Nothing but as an auditor, how you can obtain audit evidence regarding existence of inventories. This is from the chapter audit of items of the financial statements. So from the audit of items of financial statements, you can write that verification of inventory part. Clear? Right. Next. SQC1 requires assumption of leadership responsibility for quality within the firm. Are such leadership responsibilities required for audit engagements only? Who assumes such leadership responsibilities within firm? How it is important for audit quality. So this is from SQC1. So they are telling SQC1 first thing says, in order to maintain quality, the firm should have policies and procedures. The first policy is leadership responsibility. Who should take the leadership responsibility? In case of entire firm, leadership responsibility should be taken by managing partners or the CEO. In case of audit, SA'220 will become applicable. In case of an audit engagement partner should take responsibility, but SQC1 talks about the entire firm for all kinds of engagements. As per SQC1, CEO or managing partner should take the leadership responsibility. And SQC1 doesn't talk about only maintaining quality of audit in audit engagements only. SQC1 talks about maintaining quality in review engagements also, assurance engagements also, related services also. Clear? So you have to write in this manner. You have to write about the leadership responsibility paragraph from SQC1, and also you should add a fact that SQC1 doesn't talk about only maintaining quality in audit engagement. It talks about even review, assurance, and other related services also. And they're also asking you to write why maintaining quality is important. Because if you don't do the audit in a qualitative manner, so many people's decisions are going to get affected and you have to face the legal consequences. That's why maintaining quality is very important. So in this manner, you have to present the answer. So this answer also, you can read it in the suggested answer. It will be straightforward. Next. CAX is contemplating the use of negative confirmation request as a sole substantive audit procedures to verify certain accounts payable which are reflected in the financial statements of a company. Which conditions need to be met to use negative confirmation request as stated above? So when you can use negative confirmation request as a substantive audit procedures. As we know, negative confirmation does not give as persuasive audit evidence as positive confirmation. So you can use negative confirmation request as the sole substantive audit process in only certain circumstances where the risk is very, very low, where the population contains very small and homogeneous items, where low exceptions are identified. You know the third party very well that he will definitely respond. So only in those few circumstances only you can use negative confirmation request as a sole substantive audit procedure. That's what they're asking. What are those circumstances when you can use negative confirmation request as a sole substantive audit procedure? Additionally, CAX is of the view that negative confirmation provide same level of persuasive audit evidence as in the case of positive confirmation. Do you think negative confirmation will give same level of confidence as positive confirmation? No, it will be less persuasive. Do you agree with his viewpoint? No. Provide reasons for your answer. So just write that factors, that itself will be justification. Next. CAH has been offered audit of financial statements of a society engaged in promoting social causes such as setting up of the drug de-addiction centers for misguided youth and rehabilitating such young people by helping them find avenues of gainful employment. Okay. However, CAH failed to send audit engagement letter to the society's governing body and proceeded to conduct the audit. In the absence of this letter, the governing body is of the viewpoint that purpose of such an audit is to provide absolute assurance against possible errors and frauds in the financial statements. Auditor is required to send the engagement letter, but he did not send it. Since he did not send the engagement letter, management is of a misconception that auditor has to provide absolute assurance. Does it constitute violation of fundamental principles governing professional ethics? State reasons for the same. By not sending engagement letter, did he do something wrong? Did he violate professional ethics? Yes. So as we all know, there are 5 fundamental principles: integrity, objectivity, confidentiality, professional competence and due care, and professional behavior. So which fundamental principle has been violated here? Professional competence and due care. You did not provide competent service to the client. So as a chartered accountant, it is your responsibility to do the work as per technical standards, as per applicable standards, as per applicable laws and regulations. Since you did not do the work in a competent manner, since you are careless, you did not apply care while auditing the engagement. So by not sending the engagement letter, you have violated the fundamental principle of professional competence and due care. Clear? So you have to write about a few points regarding engagement letter, what is the purpose of the engagement letter and all. Then you write the facts once again. Finally say that by not sending the engagement letter, auditor has violated professional competence and due care, and try to explain that professional competence and due care, that paragraph you write it. That is how you have to present, because you have to get 5 marks, no? So in order to get the 5 marks, how you have to present the answer, for the sake of that clarity, just refer to the suggested answer once. Just have a look at the suggested answer. So as you could see, first they have told about engagement letter in one paragraph, then they told by not sending engagement letter which ethical requirement he has violated, and they spoke about that professional competence and due care in a detailed manner. Next. While verifying cash and cash equivalents of a company, CAD engagement partner is very particular that bank reconciliation statement prepared by the management in respect of bank account maintained by the company is proper to rule out misstatements in cash and cash equivalents reflected in the financial statements. So auditor feels that it is very important for the management of the company to prepare the BRS, so that from that you can find out whether there is any misstatement in the cash and cash equivalents. Okay. The company does not use net banking and prefers to issue checks to its creditors and receives substantial payments to payments locally through account pay checks. So what they're telling is the company will not use net banking. They will make all the payments through checks and they will receive account pay checks. Which aspects need to be taken care of and verified by CAD in respect of BRS? What things you are required to verify while verifying the BRS? This is also a question from audit of items of financial statements. In that chapter, if you refer to the question how to verify cash and cash equivalents, there will be one paragraph which will be talking about what things you need to verify regarding BRS. Straightforward question. But see, the question is how lengthy. Even if you ignore the entire question also, read the last line also, you'll be able to write the correct answer only. So why the questions will be this lengthy is because ICA just wants you play with your psychology and they want to kill your time. You have to be very smart in reading these kind of questions. So you should not develop panic while reading the lengthy question. Just have a positive attitude. If the question is lengthy, the thing they are asking is straightforward. Clear? Next, fifth question. CA Sumit has been appointed as statutory auditor of Core Limited. List out some matters that he may consider in determining whether a deficiency or combination of deficiencies constitute a significant deficiency. This is a question from SA 265 where you will be able to find when we can call a deficiency as a significant deficiency. So there will be certain factors which you will consider to determine whether a deficiency is significant deficiency or not, like the likelihood of the deficiencies, susceptibility to fraud, subjectivity or complexity involved, what financial statements are exposed to that deficiency, how much volume of activity is happening through that deficiency. So all these factors will be considered in determining whether a deficiency is a significant deficiency or not. A question from SA 265, direct question. Next, while conducting the audit of Xena Limited, CAE is trying to obtain understanding of different components of internal controls of the company. Such an understanding is necessary and is required to be documented in accordance with the standards on audit. In this context, how he shall obtain understanding of risk assessment process of the company and how this understanding is important to the auditor. Now they're talking about 5 components. There are 5 components of internal control now. First component is control environment. Second component is entities risk assessment process. Third component is information system including business process, control activities, and then finally monitoring. Now they are talking about the second part. So what is risk assessment? The most important component in internal control is the management should study their own organization to find out what kind of risks are there. They should understand various reasons by which the risk could happen. Why? Because if the management can identify where there is a risk in their organization, then only they can implement internal controls to prevent that risk from materializing. So just open that internal control or risk assessment internal control chapter, go to the components, write about the second component. Next. Section 72 subsection 1 of the Multi-State Cooperative Societies Act 2002 states that only a person who is a chartered accountant within the meaning of the Chartered Accountants Act 1949 can be appointed as an auditor of a multi-state cooperative society. 100% yes. Who according to section 72 subsection 2 is disqualified from being appointed as auditor of a multi-state cooperative society. Disqualifications of auditors of multi-state cooperative society they are asking. So there are certain disqualification which will be similar to disqualifications of auditors of the company. Like what will be that disqualification? So a body corporate, an officer or employee of the multi-state cooperative society, a person who is a member or who is in employment of an officer or employee of a multi-state cooperative society, or a person who is indebted, who has given any guarantee or provided any security for an amount exceeding 1000 rupees. So these are disqualifications. Once again, a straightforward question. Next. National Bank has advanced cash credit facility of 25 lakh rupees to Sun Industries Limited. Following is the extract of account of Sun Industries Limited reflected in CBS from December 1 to 31st of March. So they have given cash credit facility of 25 lakh rupees. So they have disbursed the loan of 45,000 and the customer has made the payment of 1 lakh rupees on 31st of 12. But from 31st of 12 till 31st of March, there is only debit happening in that customer's account. There is no credit. There is no credit. So just in the MCQs we have seen when the cash credit or OD facility will be treated as out of order. When it will be treated as out of order, number 1, when the amount has continuously been excess of drawing power or sanction limit. Number 2, even though the amount is within the drawing power or sanction limit, but there are no credits for a continuous period of 90 days as on the balance sheet date. So if you see here, the amount, the outstanding balance is always less than the facility, less than the sanction limit only, but still from 31st of March, from 31st of December till 31st of March, there is no single credit entry received from customer's account. So that means even though the outstanding balance is less than the drawing power or sanction limit, but still there is no credit in the customer's account for 90 days. This account will be treated as out of order. So drawing bar during the above period was consistent at 25 lakh rupees. The account was classified as standard asset. Do you think they can classify it as standard asset? As on 31st of December 2000, okay. As on 31st of December 2023, it was classified as standard. The security charged with the bank remains intact throughout this period. Comment on asset classification on above account as on 31st of March 2024 of bank in accordance with RBI norms. So clearly it is out of order. So that only they have told when an account should be treated as out of order. So that whatever we have seen in the MCQs that they have told. So in the given case, all the outstanding balance in account is less than sanction limit or drawing power of 25 lakhs. There are no credits continuously for 90 days as on the balance sheet date. Therefore, it has become out of order and it is required to be classified as NPA. Understood? And particularly they are asking about the asset classification. So under NPA also it will be classified as substandard asset as it has remained NPA for a period of less than or equal to 12 months. Understood? So that's what I'm insisting you. So before you go for the examination in the audit of banks chapter, particularly look at the NPA norms. NPA norms are going to be very, very important. So please look at the NPA norms, then go for the examination. Next. While performing audit of financial statements of a listed company, statutory auditor needs to maintain an attitude of professional skepticism for related party information. State examples of the records or the documents that may provide information about related party relationships and transactions. Nothing but what documents auditors required to verify to know about related party relationships. So this is a question from SA 550. There will be one straightforward answer. What documents auditor can verify to know related parties, like he can verify income tax returns, information supplied to the regulatory authorities, shareholder register, investment register. So these are all various examples of the documents which can be verified by the auditor to identify the related parties. Next, Sanjana is of the view that there are some disadvantages in the use of the audit program, but most of them can be removed by following some concrete steps. Do you agree with her perspective? Comment. Yes, audit program suffers from some disadvantages, but those disadvantages can be overcome if the article assistants keep an open mind. So write the disadvantages and add that concluding line also. Even though there are disadvantages, these can be overcome by taking some appropriate steps. And or alternative question, BOTS is a manufacturing entity having material, property, plant and equipment items in the financial statements. The auditor of the entity wants to verify that PPE items have been valued appropriately as per generally accepted accounting policies and practices. Comment on the significance of such verification. Suggest a few audit procedures in this regard. Once again, a question from audit of items of the financial statements. They are asking you how to verify valuation of fixed assets. They're asking you what? How to verify valuation of fixed assets. Once again, a question from audit of items of financial statements. So that's why I always insist audit of items of financial statements is a very important chapter. Please don't ignore it. I have also prepared a summary of that audit of items of the financial statements and also audit of various entities. Please use that summary for the purpose of your revision. So this is regarding MTP 1 series 1 discussion. MTP series 2 discussion, I will upload the video soon. Clear? Thank you very much, guys.